what is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining live. What's going on, Delgado? Good morning. Good morning. As you guys know, chat on both X and on YouTube. Chat's open. Anybody wants to throw some comments, questions, agree, disagree, stocks you want us to look at later, just drop it in either of the chats, and I'll make sure that we get to it. As always, we're going to break down everything that went on, overall market, leading themes, industry groups. We'll look at some charts, just talk about everything that's been going on in the market. We did have a holiday week, so it was a shortened week in terms of action. But that doesn't mean we take a break from doing all the analysis that we do. Only 3 more trading days left for 2025. So let's finish out the year strong. Without further ado, it's time for the Rapid Review. All right, Chad, happy holidays. Happy holidays. Merry Christmas, everybody. Madrick, Delgado, happy holidays. Appreciate everybody joining. Little surprise at the end, something that I've been working on that I'm going to show you guys once we get done with all our usual stuff. So definitely hang in there. Something I think is pretty cool. It's going to help my trading and hopefully help a lot of other people's trading a lot. So at the end of this, I'll tell you what that is. All right, as always, here's the disclaimer. You guys know the deal. Educational, informational purposes only, not financial investment or trading advice. Read through that. And made a mistake here. All right, so we're going to have to do this real quick on the fly because I forgot that I did not update this. So in terms of the uptrend, right, we are in an uptrend still in terms of a macro uptrend. And in terms of distribution days, currently, sorry, excuse me, I thought I updated this, but let's bring this up for you guys anyway. All right, in terms of distribution days, we're currently sitting at 5 distribution days over on the S&P and a total of 5 distribution days over on the NASDAQ. So 5 and 5. As you guys know, I am doing the similar approach to what IBD does. The big difference is you might see some volume differences where the rules are the same, but my volume counts it or it doesn't count it as distribution day. So that could be the reason that you are seeing a slight discrepancy in terms of what I'm actually showing in terms of distribution and what IBD is showing for distribution. So that's the reasoning kind of behind all of that and why things might be just slightly different, but needless to say, there is moderate distribution that we're seeing on all of these indexes. We're going to update this real quick right now. Oops. All right, on the distribution day tracker, let me see, this is not accurate either. Hold on one second, guys. I apologize. This is all on me. There we go. All right, there's our updated distribution day tracker, so you guys can kind of see that. In terms of days for next week, what we're going to see, the 12-17 distribution day going to possibly drop off on the NASDAQ if we have a really, really strong week. So that is a possibility. Other than that, nothing else is going to drop off. This week, we lost the 11-17 and the 11-18 distribution days due to time on the S&P, but we did not see any change in distribution, due to any of the action. Oh, hold on NASDAQ. All right. Sorry, guys, a little bit of a mess right now. No change of distribution days on the NASDAQ. In terms of what went on, I'm just going to go full screen on you guys. In terms of what went on for the week, all right, so for the week, we had the NASDAQ was up 1.22%. The S&P was up 1.40%, and the Dow was up 1.20%. And then for year to date, looking at everything year to date, we have up 17.82% on the S&P, 22.18% on the NASDAQ, and 14.49% on the Dow. So giving you an idea of kind of where we're at, where we're looking to hopefully end out this year. And we'll see if we could maybe even have a little bit more of an up move by the end of this year. All right. And lastly, we'll talk about the moving averages. So moving averages right now, we're up on all moving averages. And I'm just going to jump over. We'll go over and look at the indexes. So we're up on all moving averages, above all moving averages. The main thing that we did see as a difference was this week we had the 10 cross below the 21-day moving average on the NASDAQ. And then if you look over at the S&P, we can see we are basically bringing right into converging the 10 and the 21. Other than that, though, we're green on all of them, which is positive. So good to see that. So let's talk about what just went on in terms of the overall market. Let's go back to the NASDAQ, look at things first on the daily. So like we had mentioned, this was a holiday week. Because it was a holiday week, we had the day before Christmas, Christmas Eve, we closed at 1 o'clock, so shortened trading day. And then Christmas Day, which was Thursday, we were closed. So really only getting 3 and a little more than a half trading days in this week, which is why we also see a lot of lighter volume. We also see a lot of lighter volume because it's a holiday week. You know, the same way many of you, I'm sure, were out of the office or, you know, getting out early or just maybe not doing as much work. This is the same reason that, you know, things quiet down on these big trading holiday weeks with the trading. So lighter volume, but nothing too alarming. So if we look at kind of just how things went through the week, we have Monday, which is the 22nd. Strong follow-up. All right, we had actually talked about this on the last episode. We expected a pretty strong move on Monday, your typical Monday morning type gap ups. But I said be cautious because we've seen over and over again in very similar kind of setups as this, get the strong Monday morning gap up, it eventually rolls over. And we kind of saw that. But luckily the market did kind of rebound. We did close below those opens, but still up for the week, which was up for the day, which was very, very good. Then we went into Tuesday. We still saw some of that strength kind of following through. This was probably one of the strongest looking days that we saw this week. You can see we opened slightly down, and then when the market kind of rallied, we got up towards closing near those highs for the day. Volume was a little bit higher than we saw on Monday, which was positive, and continuing to make our way to that 1210 high. Then we had the shortened day on Christmas Eve. You know, lackluster, nothing really to write home about, but up slightly again as we continued to inch higher and higher towards that 1210 high. And then on Friday, the day after, we saw that we tried to get up, we tried to get near to that kind of high, but then just kind of rolled over just slightly. Nothing too concerning there. Somewhat expected to see this action. And again, overall, just lighter volume throughout the whole week. This right here, I'm kind of just disregarding because this was a half day. So even though volume was higher on Friday, you are comparing to a day that had a lot less trading. So looking at what's going on now, the big thing to me is we're seeing what could possibly be a really, really nice VCP pattern forming on the NASDAQ. And if you don't know what a VCP pattern is, you could just kind of look it up. But in general, it's a volatility contraction pattern. You're seeing from left to right, from a high to a potential next move. You're seeing volatility decrease from left to right. You're seeing these pullbacks get less. So this was kind of a really big new low that we created from the end of October going to the end of November. Then we kind of rallied, paused. You can even see the days itself getting kind of tighter. We pulled back again, made a higher low, kind of rallied again. Again, just seeing tighter action on these days. Granted, some of this is due to holiday week. And now we kind of paused right at that prior high. Would not be surprised to see us start out next week with a kind of small pullback. That would be ideal. If we even pulled back to like these moving averages, kind of stalled, and then rally to hopefully take out this 1210 high. That would be like a perfect VCP pattern with these kind of 3 little moves down and then shaking out a ton of people and then moving up to hopefully an all-time high and see this kind of continue high, to keep going on a more sustained, cleaner uptrend. So that's kind of what we're looking at right now. Not saying it's going to happen. That's just saying kind of like, to me, ideal situation. I do consider that way we kind of paused here, we might see a little bit of a pullback just continuing out on Monday, and then we'll see how the rest of the week kind of shakes out. So looking at the weekly, like we had said, this is a lighter week on volume. It's not down there, but lighter week on volume due to the holiday week. Upside. All right, so let's talk key levels. On the upside, the 1210 is the major key level that we want to see. We want to break through that level, create an attempt to be working towards those all-time highs, but taking out those prior highs. This is where I'm really watching that 23,704.008. Not just a break above it, like a sustained move above it and a follow through, proving that we're really, just like a stock, really breaking out through that level. Not going to be concerned, though, if we get rejected, as long as we kind of either A, maintain above these moving averages, or at the very least, we maintain above the 1217 low. And then the 1029 high being the next level to keep an eye on. Chad, do you have a study that draws those dotted lines? Do you manually make them? I manually make these on the charts. I think it's just part of my general analysis, and it takes 2 seconds for me to just kind of right click and add a line off of it. And it's part of my general analysis, looking at highs and lows. So I don't have anything that does it automatically. I think it would just be too complicated for me to, put times and everything in. It takes me 2 seconds to look at what was a prior high and just draw a line off of it. And it helps you also with building your own eye for technical analysis. So yes, all done manually. On the downside, it's 21, 10, 50, those three moving averages. Really keeping an eye with the 50 being the one that is most important moving forward. And then the prior lows, like we had just mentioned, 1217, and then prior low of 1121. Those are the areas that we are keeping an eye on. Every time we break below one of those levels, it just makes us more and more bearish going down. Yo, what's going on, Brian? Happy holidays. Happy holidays. All right. Let's look at the S&P. I normally skip over the S&P because the action is normally very similar. This week, we cannot, though, because the S&P now made all-time highs. We saw on Tuesday, which was right here, we had an all-time closing high. Not only an all-time closing high, but we were able to take out the 1211 high that they had, that same prior high we were talking about on the NASDAQ. So this was positive to see us take that out, have an all-time closing high, really strong action on Tuesday. Wednesday, we followed up again. Again, short trading day, so volume was lighter, but we made an all-time high closing and just all-time high in general. So really positive to see that happen. And then on Friday, made an attempt to another high and kind of stalled. Not alarming. This is a pretty strong move off of the bottoms of 1217, and to see it kind of pause right as it broke out, nothing alarming, especially because it held above that 1029 all-time high. But definitely seeing a lot of strength in the S&P. We've been saying over the last couple of weeks that it's been performing better than the NASDAQ, and we're seeing it really as it's the first one to make an all-time high. This could also signal that the NASDAQ's just lagging behind, but could be possibly following in its footsteps, working towards an all-time high. So, but time will tell. We do not try to predict. We're just trying to see what we're looking at and what the probability of certain things happening are. So that's what we have going on with the S&P. The key levels for this is just continuing to make all-time highs. High of the day for Friday was something I would keep an eye on. And then to the downside, can we maintain above that 1029 high? Also that 1211 high. So this kind of area, can we stay above it? Then it's the moving averages, the 10, the 21, the 50, and then this prior low, the real big areas that I'm kind of keeping an eye on for the S&P. All right. Anybody got no questions in here? Nothing. Everybody looks like they're just kind of saying what's up. Appreciate that. So let's jump over. Let's take a look at Deepvue. For those you don't know, I am a Deepvue partner. This is the tool that I use for all my chart analysis, all my fundamental analysis, themes, industry groups, everything. I really love this tool. It has made my life 1,000 times easier. It has everything that I need. If you are interested in checking it out, just YouTube. You can check the link in the description. And I have my little affiliate link in there. And on X, you can just check my link in my bio. And I'll take you to the tool, and you can give it a shot. Do a month. Let me know what you think. If you've got questions, shoot me a message. I'll be glad to show you and help you out. So let's switch over to what I do for my weekend analysis. Just change these time frames up a little bit. All right. So for the week, we had silver miners. No surprise there. Silver has been the talk of the town lately, showing a lot of strength, both in the actual mineral itself, or metal itself, and also in the actual miners. We see steel, real estate, gold miners, materials, medical, cybersecurity. Like, we're seeing a lot more of those S&P type of stocks showing the most strength. So no surprise to see that. Going into the 1 month, we're seeing a continuation of a lot of what we've been seeing these last couple of weeks, with silver and the gold miners really continuing to lead. Silver and gold miners, metals, minerals, that has been basically what has led this entire year. You have the AI plays, 100%, semiconductors, things like that. But silver and gold miners have significantly outperformed the market this year. If you have been dabbling in those areas, you are likely doing very, very well. And this is why we do this every single week. Other than that, though, for the month, we're seeing growth stocks, solar, aerospace, semiconductors, some biotech stuff still, and healthcare, medical, all floating around here. Quantum starting to peak up. So a lot of the same groups that we're seeing every single week are continuing to show strength. A lot of groups we're seeing bases forming. Some of these are a little bit more extended. So one of the reasons why I use this as my kind of overall analysis, and then now I'll come over to my theme tracker and I'll sort this by 1 month, is now this gives me some context to these moves. It doesn't just say this is leading, it tells me where it is at in the leading. So perfect example, silver pretty extended. As the end of the year, which stocks and themes that you're watching for 2026. So I'll go through this and then I'll kind of just talk about what I'm kind of watching going into the year. It's going to be a lot similar to what I'm saying in this, but I'll add a little more context to it. So silver has been a massive move. The big thing we have with this is it has gone on the run for a while. So it's just a little extended. In terms of groups that I definitely want to keep an eye on, you have the cannabis type of industries. We have seen that it looks like this is trying to get out of that stage 1 base and start to form like a stage 2 uptrend in terms of the Stan Weinstein, not a CANSLIM base. So definitely been keeping an eye on that. Again, silver miners, some of them, when you look at it, it's just most of these are going to be extended. And then you have more of the medical marijuana stuff, or just marijuana in general, metals and minerals. Space exploration. This is one of those groups that I'm really going to keep an eye on. It looks like possibly forming a VCP over here as well when you look at the daily chart. So if you were coming here, and this is what I love about Deepvue, and I click holdings, I now have 30 names floating around in that area. So this makes it a lot easier. I can actually do more top-down analysis and just go through all these stocks in this groups to focus on those. But space exploration, definitely a group that I'm keeping an eye on. Gold is just slightly extended. A lot of these names have broke out if you haven't bought them already. Metals, mining. Jets, airliners in general. I personally, because of my job, cannot play stocks in this area, but you can. So this is another group that had just broken out. A lot of names probably extended, but still worth looking at. Lithium batteries, battery tech in general, another group that seems to have just broken out. So keep an eye on those names. But I think a lot of these two have broken out. You can kind of look and see if there's a couple of top names that maybe are still right around buy points, but start to break out. Gold, we talked about. Again, really watching that space, defense, this kind of area right here. Steel looking like it's about to make a breakout from this little kind of pullback. Aerospace, transportation, solar, another one that's looking like you're seeing that volatility contracting. This has been a group that we saw lead and break out, get into like more of a stage 2 uptrend, and now it's having its like first pullback. So this is really, really worth watching, I think, is solar, seeing how that kind of shakes out. And semiconductors. Semiconductors had done really, really well this year. and now it kind of had that first pullback. Don't forget about those groups. Just because they got hit and some of these names spent some time down the 50, a lot of them have started to form bases. So keep an eye on the semiconductor space as well. And that's more semis, telecommunications. Yeah, that's pretty much what we got in terms of groups. So I think the big names that I'm really looking at going into the next year are those semiconductors, seeing if they can actually recover, break out of what is now a new base they formed after that big uptrend. And really the space exploration, seeing a lot of that. And cannabis, if that could be turning around for a trend this year. But that's what we'll see. All right. Looks like we've got no more questions or things talking about industry groups and themes. But yeah, there's a lot of ways to do this. This is my method of kind of doing like a top-down analysis, the market, the themes, the industry groups, and then going into the stocks. This way I have a good visual on really where most of my buying should be going. All right. Palantir. Yes, we will 100% look at Palantir. Definitely, Chad. All right. So let's just quickly talk exposure levels. So given the holiday week, given the lighter trading action, as much as I love the action that we had this week, it just gets a little asterisk for me. It's just, I can't give it the same weight that I would give a normal volume type of week with normal action. It's just a little bit of a caveat that I have to take into play that we had a shortened trading week, shortened trading volume, and really seeing if this is just a real move or just, as people call it, like a Santa rally or whatever you want to call it, how put the label on it. So next week we also have Thursday market closed for New Year's Eve. So another shortened trading week. And yeah, that's really it. So just because we inched out the all-time high in the S&P doesn't necessarily mean we're completely in the clear. We saw that we inched it out on Wednesday, and then on Friday we just kind of pulled back slightly. So could we pop and roll right back down? That could happen. We saw this happen earlier in the year with the S&P. If you go back and you look at the S&P in the beginning of the year, we're kind of in that tight sideways action. There's a point towards the end of January where we broke to all-time highs for like a day and then just rolled back over and then went right back into chop. So a lot of this is about that confirmation, and a lot of our trading styles are that trend following type of trading style. You want to see not just the boom, little pop of a trend, but you want to see those trends hold and continue to go higher. So we'll see what happens little by little. We'll just see what the market tells us each and every day, and then that'll change how much exposure we put into the market. Now, this doesn't mean, everything I'm saying doesn't mean I'm sitting out of the market. I think if you're seeing good names to buy them. I think it's just be cautious in the amount of exposure that you're putting into the market at what could be a crossroads to turning in either direction. I personally think that 40 to 60% range is a good spot to be in. If we move higher, if you're dabbling in the market will pull you in. You'll end up getting fully invested pretty easily. If we roll over, well, you're not putting as much risk into the market and you're not going to get hit as bad. And then when we're in those tight range bound areas, really limiting exposure, which now I think we're on towards the upper side and we're looking a little more positive. But prior to this, I was using very, very small positions just because you don't want to get eaten up with like that death by 1,000 cuts chop if you're going on heavily invested positions, a lot of equity exposure, and then the market rolls over and you're trusting your stops. But every time you're just getting hit, your equity is getting hit. You see those big drawdowns happen. So keep that in mind. Yeah, only other thing I'd add is this could be an environment to maybe peel some profits off. This is not the type of environment where if I hit to a certain target point that I'm like, let me give it a little loom, letting it run. I'm taking those profits and I'm taking some of that money out of the market when the market offers it to me. I'm not trying to hit a home run every single time. Sometimes hitting a couple singles, either to just pay for all that trading you're doing so that you're kind of just sitting flat. And when the market turns around, you can take advantage, or you're just kind of getting those incremental gains in your portfolio, despite the fact that the market environment isn't just easy money. So keep that in mind, just adjusting where you're taking profits and things like that. All right. That's really all I got on terms of exposure level. So let's jump back over to Deepvue. And oops. Let's see. So first things first, we got Palantir. So good call by Chad. Look, the fundamentals, we all know the fundamentals. We all know the story, right? I'm not going to get into that. This has gone on a massive run on the weekly since 2023. Massive, massive run. And it's respected. It's, what do you call 40-week moving average. So, is this the 40? No, this is my, what do I got on here? Yes, 40-week moving average. Obviously, not easy to have some of these giant pullbacks and to hold for the bigger move of that. So I'm not saying that. I know not many people that want to take some of these big dips from peak to trough and experience a 50% pullback. Like, I'm not saying that you should have held to this. I'm just saying in context of how this stock has trended in the macro trend, it's been great. And then when you come into it on the weekly, you can see that we've been very similar to what we're seeing with the market, where there's just this sideways action base forming. And from this peak right here, you got 1, 2, 3, 4, 5, 6, 7, 8. So we have this 8-week base, which I like that. That's good. We've spent some time in the basing pattern. This isn't a small nonsense base. This is a true base that we're looking at right here. So let's go into things on the daily. Did not like, obviously, we broke below all these moving averages. This was a brutal washout. It's pretty steep decline. We actually dropped quickly in a couple weeks, but it was only about a 28-29% decrease. So the depth was not too steep. And I think a lot of what the basing in here is more of this time, right? Because if you really look at, besides this little peak up right here, there's been a lot of sideways action going in from August. And sometimes the sideways chop is really what washes out some of those weekends, which is what we're looking for in some of these bases. You can see V-shaped kind of recovery though right here, and then stalled above these moving averages and kind of had this little kind of Darvis box type area, which is good. Good to see that. We made another leg up, and now we're starting to hopefully what looks like start to respect these moving averages, respecting the 10 maybe, the 21, the 50, everything trending upwards in the right direction. A pop right here of some high volume above average action on the upside, which is positive. Things starting to tighten up. So this base pattern is definitely forming. I would like to see either some sort of a handle start to form, or at the very least, you need just to have an area that you're shooting for. So everybody's going to be slightly different in terms of how they're going to analyze this. I think some people are going to be looking at maybe the all-time highs and having just a big cup type breakout. Some people are also looking at the fact that we have this pullback right here coincides with the high over here. So if you were to draw a line, right off of that, we kind of pulled back to the 10. We're kind of hovering about that area. We're hovering above these lows right here. You could probably put a position on and assess your risk here that we should hold above these moving averages. And if you were to say be buying somewhere around here, look at that, even to the 50, that's about a 5% move. So that's one of the things that I would be keeping an eye on. Like, where can I enter this with good risk, give myself enough room to be able to hopefully, ride this as it's going into an all-time high. If you're going to buy somewhere in the base, or if you want to wait and let somewhat of like another handle, Darvis box, more VCP type of pattern form, you could do that as well. So, but for me, this is one that I've been kind of debating about putting a position on because of how tight that I can put my risk in some of these areas. It's supporting these moving averages and everything like that as it's starting to trend up. So I think there's a lot of ways you can trade this, but I think this is one that is on a lot of people's watch list for sure. I also have a little bit of a headache with this one because I've yet to make money off this stock this year. All right, let's keep going. Apple. Oops. All right, Apple forming a base, right? It's kind of pulled back. It's held its 50. This is going to move a little bit less, not as volatile. So forming a base, let's see if this can start to build that right-hand side and see how that works out. But yeah, definitely I can see what you're looking at in terms of Apple. And this is just one of those liquid leaders that does very, very well. And even the fundamentals are still very, very good for a company of this size. APH. All right. Big uptrend from the beginning of the year. Super, super strong. Basically respected almost the 21 throughout the almost entire year. And now forming pretty much like a double bottom. You have right here where you're getting, let's see if I could open up. There we go. I'm going to turn this off. Okay. All right. So forming a kind of double bottom right here, looking at this range around here. So this is just a really good double bottom pattern. Really like this. Volume and tightness kind of coming here, getting above all those moving averages. This really nice double bottom pattern here. Fundamentals in this company look great. And this is a name that I think a lot of people have been playing with. Ties into AI, ties into a lot of this just tech stuff going into the future. So yeah, really like this, especially after a real big sustained move to have a nice base pattern starting for now. We're going on a month and a half. So good action here. And this is just so you can see it on the weekly, that kind of double bottom pattern right there. But so definitely like APH as well. Just needs to get to that buy point, worth the watch. Vert. Let's turn off this. All right, similar action, right? I don't like that we're underneath those moving averages. So that's a concern for me. Do I think this is possibly worth keeping an eye on? Yes. As it's forming this pattern, this, again, another double bottom. Would I be touching this anytime soon personally, living below that 50-day simple moving average? No. But I can see why you want to watch this, and we can see if this is a real true base pattern, or if this is just going to get rejected at the 50 and continue to make lower lows. So keep an eye on that. Not something I'm actively looking at, but I could see wanting to watch if this can form a pattern. All right. These are stocks I have on my watch list. All right, let's see what we got. AEM. I do own this. Oops. I do own this name. Yeah, as this kind of broke out through here, is when I kind of bought some, because we had basically this peak, and then right as we broke around here, I did buy some, and it's been respecting everything very, very well, holding above those levels. So I would, on AEM, I would just look, can we get some sort of a tightness or a pullback or something to assess your risk a little bit better? Buying up here is just a little high off of all these moving averages. It has kind of run up and extended. Even if you were to, let's see, you could play it maybe down to the gap up right here as a tight stop, saying it holds that gap up. But we all know that realistically, this could really reasonably trace down. I mean, you could also buy here and use those moving averages. Just understand that there's a high probability that this could kind of pull back to those moving averages. So, but you could assess your risk in this. So I do redact what I just said. You could, take a buy here and just play it off of even the 50. What's the 50 depending on? 50 is a little steeper, going 8.75%. So keep an eye on that. A couple of ways to play this, though, but definitely gold miners, right? This is, they're leading and they continue to lead. So finding a way to get in some of these names is good. GFI, just kind of grabbing some random ones. GFI, very similar. This is where I would say just kind of pick one of the gold names and just play that because they're all going to follow similar trends. FIX, Comfort Systems. This is a name I've been watching a lot. This line is no longer valid. It's kind of tightening up across these moving averages, so I could see playing this. But this is kind of very common action that we've had where you have these big gap ups, tightness, up, tightness, up, tightness. So I could see wanting to play this, seeing that if it could do one of these big gap ups and then kind of do this sloppy sideways tightness. So I would definitely see people wanting to kind of keep an eye on this. If I was to buy something, it would be in some sort of a like swing trade, and then once it made that big move, then I would be stepping away from it, not holding this for more position trade, because I just don't like anything that moves sideways constantly and chops around like this does. Let's see. Rocket Lab, that goes into our space exploration. We basically broke out, and now we're kind of squatting right above that pivot point. So this name is falling right into that aerospace area, something to definitely pay attention to. A little extended for me, but if you're looking at this more of as a position trade and you are comfortable with, let's say, even buying here, oops. You know, this is a tough one, because even if you're going to like breaking back down below, you're still looking at a 7% risk. So this is just one of those where, as much as it's like I really want to be in a name like this, it's far off. It's a high ATR stock, and it's just kind of nowhere really for to me assess my risk. But definitely this is a name that I'm sure a lot of people want to be in. All right, let's see. All about to break all-time highs. Yeah, so look, that's something to consider. There's ways to look at it. There's people that just buy all-time high breakouts, like a traditional CANSLIM. There's people that also buy more swing trading style, where they want things to be a little bit tighter. A lot of it depends on your style, and they each have their pros and their cons and the ways that they kind of work in markets that they work in. So depending on your trading style, that's okay. Yeah, wait for an all-time high breakout, sell if it's back and falls below the pivot point. Okay. I noticed that I mostly buy later than you guys. Yeah, and that's fine. Some people are going to be earlier entries. Some people are going to be just traditional CANSLIM position trade breakouts. They all work in different environments. They all have their pros and their cons. So something to consider. Actually, for a lot of you guys, trading equilibrium, that trading service does a very, very good job of comparing the position and swing trading and the pros and cons of that. So definitely, if you're somebody teetering between those two, swing trading and position trading, look into trading equilibrium. Very, very good explanation of both those strategies and where they fare well. All right. That's basically it. Let's finish out. We'll do my final thoughts just going into next week, and then I will show you guys the little surprise that I got for you guys on something I've been working on. So finishing it off. I think it's holiday week. Again, 2 back-to-back holiday weeks. This time of year, we just know it's just going to be lighter volume action, lackluster action. We're kind of at a weird point in the market where we're at like a crossroads, I'd say, which way we're going to go. So just don't be afraid to be patient. I think a lot of people think like, if I don't buy this week or this stock this week, the market's going to go and I'm not going to perform well. Like, there's always names to buy. There's when we have a sustained uptrend, yeah, you might miss a couple of the big names, but there's always money to be had in a big uptrend. And whether you're buying on the first turnaround where it's going to be easiest, or maybe a week later or something like that, there's always going to be times and opportunities within the market. So try not to stress yourself out feeling like I need to buy now. Like this is going to be the time. I'm going to be a little bit more patient going into next week. I have about 50 to 60% exposure between AEM and a position I have in 5. And other than that, I'm just going to keep an eye out for some potential other names, making sure that I really have a strong risk plan. I don't mind like names that we look like Rocket Lab if this rips without me, and I just didn't want to buy high ATR stock like that with hard to assess risk. It's just part of the game. The reality of things is you're not going to catch every winner. There are going to be plenty of names that go on without you, and bad buys are going to hurt you a lot more than missing one or two big names. So just continue to do the work, continue to prepare yourself. I know it's definitely harder during the holiday week. As you guys saw, I didn't even finish up my slides. But, still get the work that you need done to prepare yourself for going into next week. All right. So let me pull up. All right. I've been working, a few of you guys are in Discord know this. I've been working on a trading journal / performance analytics tool. I've had years of different ways that I've done things, and they've been great, some of them, but they've been too much work, or they have just been expensive tools that I've tried to use and created a lot of different flip-flopping, too much work sometimes where I'm like, I can't do all this every single night. It's just I'm putting in too many metrics, not enough, or I can't analyze what's really going on in my trading. So in today's day and age, I decided I was just going to basically have a whole app coded that does exactly what I want, that has everything I need, nothing I don't, and it makes things in a time-efficient way for me to not only look at my performance metrics, but also look at my mindset and my overall market outlook to make sure that I'm staying on top of how I'm trading, see the metrics I need to see, and then I have the ability to go back and learn from my mistakes and my successes throughout the year. So with that being said, here we have it. This is, I'm behind this. You can't see me, but this is Waypoint. It's the name of the tool that I have decided to create. Let me just get myself about there. There we go. All right. So this is the Waypoint Trading Journal. This is not my account. As you can see, this is test account. I just made a fake $1 million account, fake transactions, everything, just to kind of show you guys how this tool is basically going to work. This is in the beta testing phase. It's something that I'm working on myself for it personally to play around with, but with the goal of hopefully bringing this to you guys in the future. So got some people testing it and trying it out, some traders that I trust that are going to need certain metrics, and they're going to make sure that this functions to a high level so that it is effective for everybody. But just to walk you guys through, what this is going to be is you're going to be able to manage multiple portfolios. So if you have an IRA, a personal, a friend's account, whatever it is that you're trading, you'll be able to manage all of those separate. And when you do click on them, they'll basically open up an entire new interface. What's going to happen is you're going to log in. When you do log in, there is a kind of whole help section, which gives you step-by-step on how you're going to set everything up. But the big thing here is like the initial phase, you're going to customize a lot of stuff. It's going to be very, very set up to the user. And then after that, it's just kind of going to be very, very simple to maintain and keep doing things moving forward. So you're going to come in, you're going to set up your initial balances to your accounts, set up all your portfolios, balances. You can choose margin, cash. Maybe you have a day trading margin account. If you do have, I know for some people maybe overseas that you maybe have commissions that are consistent over every trade, you can log those in there. You can manage all your deposits and withdrawals. So in this one, it's just some bank interest that's kind of brought in here, but maybe you had margin interest, maybe you have deposits and withdrawals that you personally did. You can kind of put that all in there. You can use you can put in custom tags for all your setups, coupled handles, wedge pops, whatever it is. You can apply these so that it helps you track your trades and what type of setup they were, much easier. Some custom strength and weaknesses. So if there's certain things that you want to keep tracking that you're doing well or doing bad, you can build these for easy tracking. And then once you set all that up, you can dump in your trading rules. So you can just basically copy and paste a Word doc of your trading rules and dump these all in. And then this is where the big power from everything comes in. There's going to be an AI configuration. You can attach an AI language model into this, and it will help you make sense of all the data that you have put into this. So the reason I did this is the AI kind of tied into these applications can get very expensive. It's done by the token requests. It puts me at hosting this at a little bit big of a risk. If somebody's just going haphazardly crazy and there's a decent amount of people using it, it could run up my cost to running this crazily. So the plan was to kind of keep this price down. You can easily come in here, and Gemini gives free APIs that anybody can just set up an account and get a free account tie an API key in there. It's very, very simple, very quick and easy. And that's going to allow me to kind of keep the cost of this very low compared to a lot of these other tools. And you don't have to pay anything extra for the AI integration. And this future proofs it, because now you have the ability to use any really AI provider. So whoever's the leader at the time, you could drop in here. The model that is being used, you can play around with that and use different models. If a new version 3, 4, 5, 6 comes out, you can always just swap the actual language model that's sitting in here. So, and then down here, this is another thing I put in here. You can export all the information. So you can do all the work in here and decide you want to go back to your old method, and you don't lose any of your data. You can export all of your data and use it right there. So giving you this quick overview of the tabs, you have a dashboard over here. This is going to be essentially your like hub. This is going to give you all these trading metrics at a glance, and you can basically choose time frames. You could choose custom time frames. So if you notice that you had maybe a bad August, bad December, you can really see what's going on. You can look at the last 3 months. You can look at the last month. You can look at the last week and just see what's kind of going on, giving you the ability to look at profit and loss, giving you the ability to look at win rates, giving you the ability to look at average win, average loss. So you can work out your R factors, drawdowns, knowing what your max drawdown for that time period was, having the ability to look at your current drawdown. So if you get to a certain point where you really have to start limiting your trading, you can see that. Looking at your best trades, where you can kind of quickly bring up the best trades that you've had from the year. And then things like profit factor and where's the other one? Payoff ratio, just to make sure that your wins and your losses are kind of bouncing out. You have an equity curve over here, so you can kind of track that. You have your trade outcomes here, so you can see your wins, your losses, your break-even trades. And then this is pretty cool, tilt breaker. So depending on what you use, right, for your like, if I have this many losses in a row, I need to know, I need to start limiting my trading, or maybe I need to take a week off. You can come in here and you can just decide what that number is. Let's decide it's 10. And now it'll tell you right up here, I've had 8 losses in a row, 2 more, and basically in timeout. So all this stuff is kind of all auto-calculated. Now you may be asking, well, okay, how do I get this information in here? As of right now, it's a simple CSV import from your broker. So you're going to go to your broker, you're going to go to the portfolio, you're going to take your time frame that you're looking for. Maybe it's the last year, maybe it's all your trades, and you're going to import that CSV file. There is a sample file to make sure the format is working. There is a lot of fail safes and stuff that'll come in here and say like this didn't transfer because of the format, or this is wrong. But buys, sells, shorts, margin interest, transfer of data, all that stuff will come in here. You'll upload it and it'll put it all where it needs to go. What is huge and why I really, really like this, if you see here, you have campaigns and micro trades. And I know I'm kind of rambling, so if you guys are kind of bored about this, just let you guys can leave. But one of the things that I always hated about doing my post analysis was grouping trades, right? I have an initial buy, I have an add-on buy, I have a partial profit take, I have another partial profit take, and then I finally close out my macro trade. To me, that whole group is one macro trade. Those little transactions are just small trades within that. And the macro trade, or the campaign, as I refer to in here, is I want to know how that trade operates. I want to know how my buys, did I overbuy, extended from my add-on was too big and it raised my average cost. Did I take profits too early? Did I take profits too late because I had to, kind of reversal, things like that. This will auto group those trades from the initial buy, add-ons, partial sells, all the way out to zeroing that campaign. And it'll group those together. So here you have all these different campaigns, and you'll see there's different transactions. And this is all stuff that's just imported from your broker. It'll make those decisions on how to group these things automatically. It'll show you the entry weight, so that initial position, how big of a position was that? This one here, 25.3% of your overall equity. And then for the adding, it'll show you your peak weight too. So if you do maybe a small 5% buy, keep adding, it'll show you, okay, at the peak, this was a 26.7% position. Show you your P&L. and then also show you the actual portfolio impact. Like, what was the impact to the portfolio? So not only is it important to know how that trade fared for itself, but if I have a great trade with a small position size, it's going to tell me that, you know, the impact isn't going to be great. Or if I have a horrible trade with a really big position size, it's going to impact my equity pretty aggressively. So that's where I have all these metrics here, and you can kind of see everything. You can add trades manually. You don't have to import them. And you can put your ticker, shares, everything. This is where those setups, so you can put in all different types of your own custom setups to track through that settings area. What type of trade. So if you are someone that swings and position trades, it'll tag that as well, your notes, and then you can always come in here and just kind of add charts in there as well. So all this stuff gets logged, right? You can filter through all these different metrics as well. What is cool now is in your risk manager for your open trades, right? You now have your account equity. This is all auto-calculated. All you do is dump in your trades. It goes, pulls all the historic data, the closes of every day, and it'll push out exactly what your historical equity curve is, just like you see over here. And it will also calculate all this stuff based on your margin and everything. And it now knows based on my open positions. And then I can come in here, and this you do have to update. You can update your current prices, so you can see what the actual price is right now. You can update your stops, which these aren't, you know, these are for these two stocks, which I've broken out. Not very great, but and then what you can basically do is allow yourself to know how much risk you have in the current market, how much is each individual position, what the risk is. Like, this is risking 1.3% of my portfolio. If I adjust this, make it greater just for the sake of it, now you see it's risking 2.7% of my current portfolio from current price to stop. So you can keep updating the current price, the current stop, and see how much you're actually risking of your current equity in the market. So you can really, really keep an eye on that stuff. And then this is just your kind of dashboard view to look at your buying power, your open positions, your unrealized P&L. So not just your closed P&L, realized P&L, but you can actually see based at the current price what my unrealized P&L is, portfolio risk, all that kind of stuff individually. And you can access all this right here. This is just your kind of planner. So if you have a stock that you want to look up, let's just say, what's one that we mentioned? No, we'll just do hood. All right, I can hit get quote. It'll give me a price. I can adjust these. Say I want to risk 2%, all these things. And it'll give me an idea of what's going on and how many shares I should buy, how much risk this would be, just a clear overall breakdown of your trade. So really a quick calculator to help you plan your position sizing, things like that. So, right, you download all your trades, you got access to all your historical trades and all your data. You got access to your open positions and understanding your current risk assessment and potential new buys. You got a log of all your trades. But the big thing that I know gives me the biggest headache is post-analysis. So here's your trade debrief. What it does is every closed campaign gets documented, dropped in here. And then what you can quickly do is you can open it up. It's going to give you this form. It's going to give you all the data, right? All the buys, the sells, the sizes, any notes set up, all the stuff you put in here, any screenshots that you dropped in here. And then you can bring up your chart. You can look at what you did. You can give yourself a quick grade. You can put in any of the tags that you want or add new tags, right? If there's something else you want to track. You can write your own summary, put everything in there, pretty quickly assess everything. You can mark up charts and put it in here too. And then you just hit complete debrief, and then that's going to get archived, and that's going to be here. And the reason I did it this way is now it forces you to clear this out, right? It forces you to come in here and do one by one, go, okay, let me now look at my MU trade, bring up my charts, go through everything, take all my notes, fill this out, complete it, and now it gets archived. Now, if you do have a ton of data that's in here, and like let's say you already did the post analysis, you just don't want to log in here, you can hit acknowledge all. And then it'll acknowledge all, dump them all in your archive. And then now your next closed trade will come up here. So now you're going at the end of your week, you maybe closed out 2 trades, and now you can see, oh, I have 2 trades I got to review this week to kind of keep up and stay on top of doing your post-trade analysis. This is for you guys that know me. I love my market write-ups every day. I now am going to be able to come in here and just paste my market write-ups into here. I'm going to be able to quickly click what I feel is my current exposure that I am comfortable with, looking at the overall trend, and then I'm going to be able to log all this. Also, voice ability. So if I'm to click voice, which I can't do now because this mic is connected to the stream, but if I was to click this, I could just talk. I could just say, here's what I'm thinking for today. This is what I've seen, plain language. AI will take that, transcribe it all into the post analysis. And then when I hit save outlook, I'll have a whole area right here. Now what's cool here is you can search, you can pick different time frames. You can search like keywords and things like that are in here. So you can say, maybe I want to just see times where I was talking about the Fed, and I'll have all the write-ups that I had that involved something that I was talking about the Fed. You can go back, you can do all past ones. Again, just keeping track of your market outlook. And again, not only are you journaling, and this is what I've found, is like I could keep writing things up, but I'm not utilizing it to actually make sense of it. The best part is that AI is tied into this. So now because AI is tied into this, I have the ability to go in and actually use AI to make analysis and understand where the trends are, where maybe I'm falling short. Hey, I'm constantly putting exposure at 60 to 40%, but my exposure was getting up to 80 to 100%. Like there's a disconnect there. Or I'm constantly saying that I should be limiting my buys, but AI shows I said limit my buys for the last 3 weeks, and then I'm making buys for the last 3 weeks. So it's like there's a disconnect there. And I don't have to go and dig through and read through everything. The AI is going to be able to read through all of this stuff. This also goes for your mindset journal. If you're somebody that wants to be as detailed as I am, pre, intraday, post-market, quick little write-ups, again, voice tied in so I could be driving to work, pre-market, and just go, yeah, I didn't sleep really great last night. I'm kind of stressed out, and it's the holidays, got a lot of stuff going on. Trading-wise, though, things are all right. It's kind of been quiet. And I could just put something in that simple and just hit save. Pre-market, intraday, post-market, just to give the AI an idea of when these thoughts are coming in. Intraday, really for those I'm feeling hesitant on buying the stock, even though I think it's a good setup. I'm kind of feeling a little bit of FOMO. I'm kind of feeling this, and I can market all this stuff. Or I just got into a car accident because I was trading on my phone, and now I'm super stressed. And then all kind of mood indicators that tie to each one of these as well. Oops, save entry. And then you hit these saved. They'll get all dumped down here. Again, all searchable as well. But like I said, the biggest thing, and I know this is kind of a lot for you guys, I appreciate this that are staying here. The big thing is the AI analysis. So to give you guys a little background from a technical standpoint, right? There's going to be a lot of data in here. To ask AI to constantly analyze everything at once, it's going to take a while to see a response. So here, you don't always need to analyze everything. Sometimes it's the last 7 days. Sometimes it's the last 90. Sometimes it's a custom range. And you can put that in there. And let's say you're only worried about your trading performance, or you're only worried about something with mindset, or you're only worried about a couple of debriefs that you filled out over the last week, or you're only worried about open risk or whatever it is. You pick the data you want to supply the AI model with. You type in whatever it is that you want to ask. And I didn't connect this AI on this one because it's a test account, and you hit analyze. And then in here, just like every other AI model, AI comes up, says thinking, tells you what it's doing, and then we'll use all the data, use your trading rules that you wrote out and gave it, and give you an assessment of whatever it is you're asking. So you can go as detailed as where your stops have been placed, your overall performance metrics over the last 3 weeks, whatever it is, and make sense of that. Where I really like this is the idea that I can tie in my mindset journal and my market outlook. And I can use those two things that normally just become a big giant book of just me not verbally, but writing out my thoughts. And then nothing really I can derive of that unless I go back and sit and read through all of those or tie it to a specific time frame. It just becomes very cumbersome, but I think it's still important. So now using the ability of AI to go through those and pull out the important information and show you, hey, you didn't sleep good these 2 weeks. And you were talking about how you were really stressed at work and you had a really, really bad week of trading. You've made a lot of stupid decisions. Like, if we see this again, you should probably not be trading, you know, things like that. So, again, the big thing, this is very, very customizable. So the initial setup is going to be a little bit, in terms of just putting in your portfolio, right? The big setup, putting in all your setups, right? What types of patterns you trade. These you can kind of add on the fly, the custom strength. Like maybe you want to keep tracking FOMO and it's not in there, or maybe you want to keep tracking buying extended or whatever it is. If the tags aren't in there, you can just build them. So then in the future, you can just click them quickly instead of typing everything out. If you don't have your trading rules already, and because you should this could just be copied and pasted. You throw in the AI, which is real quick to get. And then a lot of this other stuff is just kind of maintenance stuff. And then once that's all in there, you kind of customize, right? Not everybody needs all of these widgets. You can move things around wherever it is that you want to. You could resize everything so it fits exactly how you want. Set all this stuff up so you have the metrics you need. And then just decide how you're going to kind of utilize something like this. So look, I'm biased because I spent a lot of time developing this, but I just think that this is once it's set up, because of little features like the voiced commands to make trade logs, because of all the tags and things where you're not constantly typing everything out. I think this makes it where you can quickly and efficiently log a lot of data, stay up to date on things like your trade debriefs, your risk management, this is something I think a lot of people forget about, looking at your current risk into the market, managing multiple portfolios, doing all these sorts of things, and managing it efficiently and utilizing AI to really, really make sense of it sometimes. And that's why I find a lot of these tools out there we're trying to make something that's simple and easy to use. It's super, super cost effective for everybody, which is why, again, I made it where you kind of bring in your own API to keep things free, keep that cost down so I don't have to charge people a lot of money. Oops. Okay, I'm back. Yeah, I think there's a lot of anything that anybody wants is going to be in here, and I'm open to suggestions when I do get to roll this out, and we'll try to make this the best trading journal out there at the cheapest price for sure. So long episode today. Went over the market, went over a lot of this stuff. But I would love to hear, especially from the Discord people. Let me know what your feedback is on this tool. Let me know what you think. Super, super stoked about this. And like I said, I'm kind of in the beta testing phase right now. I got a couple of traders that I really, really appreciate their opinions, kind of going through and playing around with that this over the next couple of weeks. And we will then hopefully get this rolled out to you guys very, very soon, so you can check it out. So that's all I got. I appreciate everybody joining for another week. Merry Christmas to everybody who celebrates. Happy New Year to everybody as we go into next week. Next time I talk to everybody or are live with everybody, it'll be 2026. So hope everybody had a great year. This was definitely a year where you could money. There were some times of some rough periods, but we had a good bulk of the year where there was a lot of money to be made in the market. So I hope people were able to take advantage of it, learn a lot. And yeah, other than that, stay disciplined, and I'll see you guys in 20.